A significant trading loss may be devastating both financially and emotionally. As defeating as losses seem, it is impossible to trade or invest without putting oneself into a losing position. That's simply the way things are. Street boosting may be used as a form of retribution against people who have harmed them, while trading may be used to recuperate part of their losses. None of the comments here will assist you if you don't know how to cope with a losing contract. Hey, let's talk dealing with trading losses. Regardless of whether it was an evident weakness in your plan, a lack of discipline, or any other cause, virtually every trader will experience a huge loss at some point in their career. Many rookie traders make the mistake of exiting qualities too fast, clinging onto them for too long, or bypassing trades altogether out of fear of losing, all in an effort to find a new profitable deals. What sets successful traders apart from those who fail is how they manage their losses. Returning from a significant loss and questioning what success is all about, success traders use losses as a chance to learn and better their trading. Nordic trading losses, particularly large ones, may be chances to improve one's trading skills. Traders who follow these guidelines after a loss become more emotionally resilient and disciplined. As a starting point, keep your terrible condition from costing more than your usual year income. Today, an important part of every successful trader's education is learning how to correctly lose money. If we are winning days and lose less than $400 on bad days, we must learn how to properly lose money. The most essential component of trading is to know how to reduce risk, since there are only four potential outcomes: a huge win, a modest gain, a small loss, or a major loss. If we remove the huge loss from our trading days, we can live comfortably with the rest of our profits. In order for a trader to succeed or fail, risk management is the important factor. Because of a precise stop loss level resets the 1% value and lets you know ahead of time how much you stand to lose if your trade goes Dorrance negatively. Good risk management can lead to a steady increase in profits, while poor risk management can completely wipe out an entire account in a very short period of time. Be aware of your stop loss level before you enter a transaction. Stop loss is a basic technique, but so few investors or traders utilize it. Whether it's preventing excessive losses or securing gains, stop loss is essential. Trading techniques of all kinds may profit from the simple strategy. To put it another way, think of a stop loss as a safety net you hope you never need. But it's nice to have if the worst happens. Always utilize a stop loss order and be aware of where it is before entering a transaction. Also, when the market falls into negative area, never increase your stop losses, since no matter what occurs, there will be another transaction. If the success of a single attribute determines your trading approach, you're using a poor trading strategy. Always keep in mind that success in trading is the sum total of many well-executed winning and failing deals. Do not engage in revenge trade. There is a lot of internal tension after a huge loss, including a desire for retribution and rage and frustration. There's no way to trade with a clear head after a really large loss, and it's dangerous for your account for two reasons. First, it forces you to abandon your discipline and shifts your focus away from your long-term goals. Second, it shifts your focus away from your short-term goals. It's gambling, not trading. When you trade, only on the basis of your emotions and a luck. The deal that you had to bury a plan for if you win, then you think that trading on guts and emotion works and you're going to do it again. Therefore, don't do it. Accept responsibility. To avoid repeating our mistakes, we must accept responsibility for our actions, and we must not blame the smart money or other traders for our losses if they are huge. Unless we embrace this responsibility, we will continue to experience losses. The more you take responsibility for your actions, the less likely it will be that anything like this will happen again. It's also held, so get it back. Avoid blaming other people for your own failures. You should not be trading if you can control your trading and investing. If you can always solve it. Whether it's by changing the market, changing your strategy, or changing your trading style. If you can't fix it, you shouldn't be trading at all. A better alternative to losing a lot of money on 1-minute charts is swing trading. The answer is out there. You just have to discover it. Stop treatment for a time. To find out what went wrong, it's best to take a break. Take care of yourself so that you can get back in the right frame of mind to concentrate on the task at hand. After assessing what transpired, consider about where you went wrong, such as whether or not you took too much risk and whether or not the transactions will succeed. One of the most difficult things to do is to step away from the market for a while, but it's a smart move given the current conditions, and you'll likely come up with new and better trading ideas while you're away from the charts. Taking a break from trading is one of the smartest moves that you can make, and it's one of the most difficult things to do. Lower level transaction. Losing a lot of confidence and not having a clear head might force you to skip Nix's attribute or to be too aggressive. None of these things are helpful after a major defeat. Trade on a demo account for the time being since it's not real money. Because a demo account comes back with no risk, traders may concentrate on trading process without being distracted by concerns about their bank account. Start modest and don't go straight back into the same position after a losing run in the demo account if you want to regain your confidence and take on the markets with real money. Take tiny positions the first few days back after a loss and slice your trading wins on small position sizes give you confidence. And as your account balance rises, you may gradually raise your position size after a losing day. Losses on small position sizes are easier to deal with than another losing day on food with chef-sized positions. You'll have to wait a bit to go back to your normal food position size even if you win a few days in a row. I understand how frustrating it may be to begin trading again with a modest position size after having previously traded positions of a larger size. Instead of focusing on generating money, recovering from a losing streak requires returning to the fundamentals and applying a plan that includes demo trading and trading with the modest position sizes. Go you back on track so that you can get back to boosting their self-confidence. It's crucial to set aside expectations about how things will turn out and to embrace the fact that you'll learn more from your failures and successes alike in trading and in real life. If you lose money, you should look at your actions more closely, read more, get more educated, and so on, so that the next time you lose money, you'll have a better idea of what happened and where you went wrong and can open up a room for improvement and start stacking the odds in your favor. You may express your appreciation by giving us a like and by subscribing to our channel and clicking the bell button to get notifications of new uploads. Until next time.